Hello everyone, a very warm welcome to all of you. This week is going to be very interesting because we were expecting some correction in Nifty as well as Bank Nifty, and Nifty has shown us a very good correction and a retracement of somewhere around 300 and 350 points. Whereas Bank Nifty is very euphoric aggressive and is slated to reach to newer all-time highs. So while this is happening, we are trading with a strangle which is hedged. So it's an iron condor. I'm not using a conventional iron condor theory, but I'm hedging it on a week-to-week basis so as to save some premium and also to make my risk little lesser. Now, while these trades are going on and we are looking at this particular market stage, I just distinctly remember important one important point which I had mentioned about Nifty, that after a certain period, the corrections get deeper and rallies get shorter. So rallies are getting shorter here and the corrections are getting deeper. This will keep on going probably till next month. And in the next month, we'll get a clarity about where the market is headed. Guys, I'll take you to the chart of Nifty here. So Nifty as well as Bank Nifty, we have both these charts here, hourly chart. And this is what I'm referring to. From a high of 18,887, we have made a low of 18,410. Now, in both the context, both the indices context, the low which is formed on Friday will be of a more importance. We'll come to this part at a later stage. But right now, what we are looking here is rallies are getting shorter and corrections are getting deeper. This is what I'm trying to explain here. So let's go on to a hourly chart of Nifty only. So what was happening? Initially, the rallies were longer, the corrections were little shorter. Then rallies are getting shorter and the corrections are getting deeper. From this correction, the current correction is still more deeper, and it can be expected that the rallies now will not be as aggressive as it were previously, and eventually the market will give up to a bigger correction from these levels. Now, how do we look at this particular phase from the point of view of a range? So we need to calculate our range, and I was about to change this range on a Friday morning. Then I thought this is something which we'll do in the Market Kya Lagta Hai video. So right now I feel that the range for Nifty can be uh, 18,850, that will stay like that, and 18,500. Now I am mentioning this range at 18,500 and we are closing almost on the verge of this particular level. We need to quickly cross another 100 or at least 50 points. So this one level of 18,550 will be my make it or break it level. Now what do I mean by this? 18,540. So this level, if we manage to close above this particular level, then it will be bullish and we'll might as well see price moving to 18,850 or maybe higher than that, and we might go and kiss 19,000 level probably in this particular month. But if we fail to cross this level, these are the hurdles. If we fail to cross this level, then we are slated to slide down, and then in that case we are moving towards 18,200 odd levels. So that time will tell us, and also the low of this particular candle is very important. The range as I have described for this particular period would be 18,500, 18,850 and 18,500. This is going to be a narrow range for Nifty in this particular week. And also I'm expecting Nifty to cross above this make it or break it level very quickly so that it will be helpful for us. Now the area between this 18,540 level and the previous all-time high, which was 18,604, which was the October 21 high, this will be also a very important resistance zone. And if we manage to cross above this, then we are headed towards 18,800. The OI data is suggesting price may be headed towards 19,000, but OI is a dynamic data, so it keeps on changing. So we'll take one day at a time at this point in time. Couple of days back, I had hinted towards that market maybe is headed towards 19,100, but right now, I will not take that liberty, or I'll not be that sure about my view. I'll take one day at a time, and then accordingly we can think over it. So this is what the analysis for Nifty is. Now, when we are looking at Bank Nifty, in Bank Nifty, yesterday's Friday's video, we had categorically mentioned that we may retest this level of 43,500. So we have retested this level of 43,500, and we are well above the crucial level. So naturally, this previous lower high level. So naturally, we are slated to move towards higher targets. The next target for Bank Nifty is likely to be 44,000. So let me just change this range here. And I think 43,000 to 44,000 is something that we will look at. This is where I want the range to be, and I need to also change the coordinates. So 44,000 it is, and 43,000. Cool. So this is what the range typically looks like for Bank Nifty. Bank Nifty is a leading index. So you can bet on SBI, you can bet on ICICI Bank, HDFC is slowly turning bullish. So if at all you want to trade directional trades, Bank Nifty will be your index. And if you want to trade strategies, then in that case, Nifty should be your bet. The strategy we are trading right now is as I mentioned, it is a strangle which is converted into an iron condor. Very quickly, I'll show you that. So this is how the trade is currently poised. So the strangle for 23 January we are trading is giving a very good, decent, healthy profit right now. And these are the four legs which are right now. We have shorted 17,600 put at 51, which is trading at 60 rupees. So a notional loss of 4,000 over here. 17,500 put sold at 99, currently trading at 52 rupees. 19,200 call shorted at 215, currently trading as 117. So it is almost halfway down. And 19,300 call, which is shorted at 230, is currently trading at 90 rupees. So this is giving us a good kind of returns so far. So far, the trade is slated in such a way that we are almost at a 50% halfway mark through. The currently we are generating about 6.77% returns on our investment, and the total investments, total returns which were expected was around 14.63%. So on a total capital investment of 20 lakh rupees, some odd, we are generating currently 6.77% return. These returns are good enough for us to book this trade. We are going to wait for another week, and then during this week, we will just ensure that these returns should not get reduced. I'll keep a cap at around 6%. So if at all, if these returns drop down from 6.77 to, let's say, less than 6%, I'll prefer to book all my four legs at that point in time. On a practical front, this trade is being executed with couple of hedges. The reason I had put hedges over here is that 19,500 I have done just to get a benefit of margin, and 18,000 put I have bought for 15th December expiry. This was available for 16 rupees. So at a cost of 16,000 rupees, this insurance is bought. This was bought primarily for some unforeseen event or some stronger gap downs. So there are no surprises so far. And as long as we see that Nifty low of Friday, that is 18,410 is intact, this low should be our guiding star. This should be our higher low for the next week basis. At any point in time, if this low is gone, then the bias turns bearish. So this will be a higher low, important higher low for the day for Nifty. Okay, so it is 18,410. Oh, it's already there. Cool. So this is what this low is important for Nifty. Similarly, for Bank Nifty, the current low is important. So both these lows can actually guide us for the next week, and the bias looks pretty strong and bullish. So that's it for this particular week. Guys, do write to me in comment box how do you find this weekly analysis and also the strategies that we are trading. In a current uncertain market, this strategies is something that will keep us in the right direction. There's a profit booking in IT as we had recommended, suggested in the last weekly episode, and also on the daily observations. The profit booking is now evident on all the IT stocks. Bajaj Finance is also at a make it or break it level. So that aspect is also needs to be taken into consideration. That's it from me for this week. Thank you so much, guys. I'm signing off. Bye bye.